For those guys, those of you online, have you all been trading already, or are you now starting to look into trading?
Yes.
You've been trading already, I guess.
Yeah.
Oh, nice, nice, nice. Okay. Currently, where we are in price, I still wouldn't look for any opportunities for a buy because in the price action that we are getting there, it's very weak for a buy. Getting anything precise, even though we've swept the landing low, that is not our interest for a buy at all. If you focus on even the fair value gap that took the liquidity, you see that its consequent encroachment was breached. That is not the best thing that we want to see. We rather we prefer if it's held. You can see how it has already done some damage, gone all the way through. You don't want to look that way and looking for a buy. And if you look closely to this point, we've gotten some equal highs there, okay, which has been swept. So it could just be that little draw on liquidity, sweep it, push up, come back and tap in here, maybe fill that gap, then sell more and come to take the equal lows. Buy here, clear liquidity, resting over here. That is why we wait patiently and focus on that 30 minutes frame to see if this will deliver a good setup for us. We don't want to be trading this buys at all. Rather want to wait patiently. Let's see what the next range gives us. At the moment, we are just sitting here patiently watching price action. We don't want to rush into any trade, even though it has taken that landing equal lows. But don't forget that when it took the landing equal lows, it created more liquidity. Nasdaq, you can't trust that. Even though it might rally, eventually you see it can't take it. Go another failure soon. Okay. Just want to wait patiently. Try and operate within that time. See what we get. Because this trade on the 1 minute, it doesn't satisfy the entry criteria anyway. So I don't see why anybody would want to enter this trade for the buy. Because when we were sweeping the liquidity, we didn't get any impulse to the downside, creating any fair value gap here. That would be our first basis for the trade. No, we didn't see anything like that. It was only in the push up that we saw a fair value gap, which has been completely closed before the second one here, which was created. But we've left more equal lows here, not really anything of significance here. And even if we want to consider a breaker, let's say this low, a high, and then lower low, we've not even breached the breaker that is high over here. Okay, so it's not, that's how you differentiate between a good trade and then a bad trade. Some will say, okay, fine, price is still going up. If you are taking this buy, it will be good. But how are you protecting yourself? What's the basis for this buy? When it was cleaner for the sell, we saw it. Okay, on a buy, if you read it carefully, does it satisfy the criteria that we want to use? No. We've got more failure swings here, some huge imbalance. We might as well just go there, tap into it, and price will roll over to come and target more liquidity down here. Because clearly people will be chasing this buys. So that is why we sit and wait. We do nothing. If within that 8 to 8:30, we can get another range, which might even sweep the liquidity again. And then we get a clear signal showing a shift in structure to the upside. We can base our trade on that to get better opportunities. So we say and wait, we do nothing. There's the part that is difficult. If you don't stay strong, you might just chase after this buys and you get into a buy somewhere in the middle of nowhere. When price starts running against you, you suffer huge losses. You suffer really. huge, huge losses. This way you sit down and do nothing. As a trader, the most powerful tool that you have is your patience. To be able to sit down patiently, patiently, and wait for the best opportunity because they'll come. But if you are not patient enough, you might waste your strength chasing after something that is not worth it. Then when the right opportunity comes, you might not even have that power to enter the trade. And what I mean by power, maybe the balance in your account to even enter that trade because you would have wasted it on a bad trade already. So we don't want to do that. We want to rather sit down, waiting patiently to strike when the right opportunity comes. Imagine you were in a buy in the street.
Spot on. You would have been you would have been taken out easily.
Hey, tell me how you be feeling right now. Are you sure you can take this heat? Imagine you are in a buy position right now. Do you feel comfortable to hold on to the trade?
Now we know for sure they are piling up orders for a very massive move. Well, if not too massive, but at least that high, that landing high will be taken for sure.
Yeah,
So if you have a very good entry, that's like some crazy RR.
yeah. So it's even better for price to keep gravitating towards the the downside,
Yes, yes. The
if we get
downside, yes.
yeah, a better sweep and we see a proper shift in
Yeah.
structure satisfying all those criteria, then we know that we are onto some great trade to go and sweep liquidity higher. But I like the fact that it left more equal highs over here. So we know that if we go
Okay.
and sweep the low and shift, we can be targeting all this liquidity more over here, more at the top.
Yeah.
So if you had entered a buy trade, just like I was saying that this is not a good trade. If you had entered it, you would have been stopped right there. There's nothing there. I like this how we are dropping and taking this liquidity, leaving. Can you imagine? Even if you don't have a stop loss, this trade will kill you. You know, I like the fact that we left this fair value gap here, which can now act as some what inversion fair value gap if we had to break right up. I like this kind of liquidity sweeps, heavy, impulsive. So that's just a simple lesson on how you can filter out a good trade and then a bad trade. This very one here did not meet any of our criteria. so we don't trade it. It will be good to see a breach this fair value gap right away. We don't want to see you trade into it and then push down again. We want to rather see you breach it to the upside if we get an opportunity for a good buy. Otherwise, we just sit and wait. The only person who will be enjoying this trade will be the seller from the top there. They will be enjoying this trade.
Yeah, that's all would have been ideal.
Yeah, that was a nice call. I didn't see it because I was checking yesterday's show. Look it up. And I also didn't like it. I happened on the 15 seconds. Yeah. But it was a nice sell. You know, yesterday I was explaining something about a 3 day that when it lines up with things, you see, after it shifted there, we saw, this imbalance around the 3 day and see how price just tapped into it. So even if you entered your trade somewhere around here, it's called an institutional order flow entry drill. You enter right there, you don't expect price to go up, leaving this as a breakout up. You put your stop loss right about here. You could have gotten a cool 1:3 or 1:4. You sit down and wait patiently. Price is supporting like very bearish. Let me show you something right here. I was watching. Low. So if you look here, okay, that week that we had, see how price was rejected. It's precision. Oh, this is precision. So right there, when I saw that, I was like, nah, the way it's rejecting. If we break out equating this gap here, then the likelihood for us to take the low is very high because we had that, strong rejection at the midpoint of that gap. There, we got a breakaway gap as well, leaving an imbalance that was not filled. More gaps, the liquidity void, sorry. Price was in a hurry to reach the downside. So when you see all the signals in price, you just know that now it's going for the next liquidity, which is resting over here. The overall price flow has been very bearish, so we want to be very patient. We don't want to rush anything. We get our next range and probably we raid the buy side and we can rather hop on a sell opportunity. In trading, You are doing two things: protecting your capital and then also trying to make profits. The most important thing is to protect your capital. So there's nothing wrong with you missing a trade. What you should be worried about is that you are taking losses. If you have your balance sitting in your account, tomorrow is another day. So always protect your capital. So let me mark this liquidity. Let's see what kind of reactions we get to that. And we are seeing so many opportunities for the sell side, but at the moment, because there's one model that we are teaching, just want to stick to it. We don't want to focus on other things and make it too confusing, or just be dropping in lessons. I like I like all these equal lows that are being created. Let's see if we can sweep them or create more, sweep it properly, and then get a nice opportunity. I like I like what we are seeing at the moment. Probably if you are going to see more sales, I just want to see a hit this week, this liquidity void, and then keep selling. I don't want to see it breach it. Now, if it breaches it and it goes up and price finds support over there, you could probably see higher prices. So we saw that equal lows that was created, rated. and it's pushing higher. So after that liquidity void, our next PDR that we are looking at also is this week right here. We want to see how price will react to the midpoint of that week. Then the next one will be the imbalance. And if we breach all of these three, probably going to start seeing higher prices. But wait patiently. So ideally, when you are reading price, you want to look at three PDRs. If let's say you are bearish, you want to see lower prices. Pick three PDRs like I've outlined here. The first one was that liquidity void. The difference between these two candles, there's nobody close there. Okay. The next one is the wick. And then the next one is the gap. If we breach all three, then it shows you that we are breaching the bearish PDRs, we should keep price lower. And so we should start seeing higher prices. But so long as these three are able to keep price down, then it confirms to you that more bearish price action. So if you look carefully, let me zoom this out. Bodies tell the story. So if you look carefully, the first one was, I'm just gonna hide this. Okay, the first one was that gap right there. See how the body stayed within it. So if we keep going lower, that's fine. But even if we breached it, okay, and then we went to the next one. The next one was what the midpoint of this week right here, and then see how price stayed below it. So it's not still not showing any bullishness unless we start seeing a really strong rally through this midpoint, breaching it and tapping into this imbalance. And if it breaks above this imbalance, then we'll be better off bringing buys. So that's how you read price and you get an understanding of where the next candles will bring their close. Right now, do nothing. Just sit and wait. So supposing you are in a sell trade and you are deciding whether you want to hold or close this trade, you can just be referring to those PDRs that flag the liquidity void, the midpoint of that imbalance, and then this imbalance, fair value gap that you have. If price stays below it, then you have more confidence to hold a trade. But if price starts breaching it, then you should know that you need to protect yourself. Okay. So we see price reacted to that liquidity void and also the midpoint of that consequent encroachments at the midpoint of that week. We are still pushing lower. So let's see if we can see lower prices from there. Hmm. There we go. So you see, that gives you confidence that even if we shorted it from there, they are heading lower. Because then again, they were holding price. That's how you read price. That's how you pick it. So as I said earlier, if you want to see lower prices, you just want to see price stay within that liquidity void because there are equal highs here, which has been rated. It's enough. Rate, you tap into a PDR, you push lower. It's more than enough. The same way here as well. Some rough equal highs, middle here, price push, tap into that. Anyway, it's the same thing. Just what happened here. The same thing that has happened down here again. It was the same thing. Right now, just sit patiently and wait. I'm not in a hurry to trade at all. Not even to be scalping those cells. And you don't need to worry at all. Feel like we've missed any opportunity. We haven't. We haven't at all. Just think about the daily range will be so huge. What happens? You get your opportunity. You get your piece of your needs. Today is Friday. It's better for you to play safe than to go into the weekend with regrets. And even this wholesale that happened, not any pit. It hasn't been so much. Get way better opportunities. Just wait. We are still seeing price respect the bearish PDRs. That little imbalance here is respected, pushing price down. This is even a breakout. So we have a low, high, lower low. So that last bearish candle that we have here, in this case, this one here, to that point, it's a breakout. So probably going to hold price down, but if we break it and go up, then that'll be good. That's what I mean. We have a breakout and then also an imbalance, which is good. So if we are able to breach it and go higher, probably shift in structure. Well, until then, if it's holding price down, bearish, 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 bearish. Just delete this, make it clearer for us to read price. Even add this gap to the imbalance. So whenever you have an imbalance, okay, let's say the imbalance initially as I drew it from that wick to the low, but on top of that candle, you also have a gap. When you are drawing the imbalance, you don't draw it from the wick. You rather draw it from the gap, okay? Because in such situations, the wick doesn't count. We ignore it. So you see that when you draw it from the gap to the top of this wick, see how price is respecting that midpoint. The wicks are doing the damage. Why? Because the wick is going to fill that liquidity void here. And that liquidity void that was here, there is no um, data, no orders were filled there. That is why there is a gap there. And that is why the market went all the way to fill it. But I see where the body stayed. The body stayed at the midpoint of that imbalance, but I just went up here to fill the gap. So if you have this understanding, that by itself is a short. That's how you reprice. That by itself is a short because you've already started confirming your sell, 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 sell. So since you have this, okay, that by itself is a short. So it's now 9:30. We've seen a ray down there. Let's see. 8:30, sorry. At that 8:30, we've seen a ray down. Let's see if we can see a shift. Okay, breaching some of this and then we'll react on it. Until then, wait. Just drop to the 5 minute and see if it can nice. We also rated it. This sell was a beautiful trade. So many pips. If we're able to catch on at 15 seconds, so many pips. 170. Even on one contract, that's about 3,000, $3,000. It's wild. If we keep pushing and then within 9 to 9:30 or at that 9:30 we see a retracement to the upside, sweeping some of this liquidity and rather focus on sales. Let's see. Right now, price is very bearish. It's clearly not a bullish market. We have a daily imbalance right here. Price just went slightly above it. Sell side inefficient. Sell side imbalance, buy side inefficiency. We had a ride here, resting years. Price just went slightly above it. We are pushing lower, so yeah, we are not surprised by the sales at all. Moreover, we've swept 3 previous days before highs. We swept 3 of them, so we are pushing lower. That's alright. To the 1 minute. I like how the bodies of this two candles were kept within that balance. Let's see if we can shift. Yeah, shift. But if we start breaking lower, then no, I'm done with that. Let's see if we can start getting shifts to the downside, to the upside. Sorry. Oh, no. So we've seen price breach the liquidity gap. It's currently in the fair value gap. Let's see if we can keep pushing higher from here. It'll be nice to see some really strong bullish price actions on here. see some of this PDRE support price go higher. Like I like how precisely this hits the bottom and then it's pushing higher. If it can reach this area here, keep reaching it, push higher, then never come back to this liquidity void. We don't want to see price come back to it. And push stronger above, creating more imbalances, breakaway gaps. And with some good price action. It will be really nice to see some bullish price actions from this point, but let's see what price gives us. So at the moment, we've swept this equal lows. We went down. We have this inversion fair value gap here. Price returned back to it, respected the 50%. We created another imbalance right over here, which price wick through. When you see imbalances with long wicks like that, price can come all the way down here to the 50% of this wick. So if I mark that out, you see that price can come to 50% of this wick. That is acceptable. But what matters is the body staying above the body, above the imbalance here. So as price did this, you can still go for a long here, and then wait for higher prices. So at the moment, we want to see price breach that liquidity void that is holding it below. We want to see price go higher, start pricing higher and break it. We want to see more bullish price action. So with what price is doing right now, if we go below the imbalance, then you want to be out of that trade. You don't want to see it go all the way below that imbalance. That is not good. Bullish price action. This was good. I like the way it hits the 50% and it's flying up high. It was good. Let's see if we can push higher from here. And from this point, we don't want to see price go lower. We want to see it go higher. Because if it goes lower, the likelihood for it to breach that imbalance at the bottom is high. We want to see immediate price displacement to the upside. Otherwise, we are going to see more sells. Yeah, this is definitely not good price action. So you want to manage your risk well. At this point, if you're in a trade at this point and you're still at break even, I'll say get out. Like I said, we're not advising you to enter a trade. But if you're at trade and it's a positive balance, just get out because it's not good price action. You should have seen immediate displacement, taking the highs and moving higher. But we are not seeing that. So let's get out of the trade. Kuna knows? Ade. Eh? I hope no one is in the shade because I think we'll get lower prices first. Let's see. At the moment, we fully closed this inversion fair value gap here, which we didn't want to see. We closed this, so let's see. We really want to see some huge displacements to the top. We really want to see those huge movements to the top. That's the only thing that will give us confidence. I like the fact that even though we went into that inversion fair value gap, we didn't get a body close in it. And we created this fair value gap right after. That is good. Okay, I'm back again. It will be really good if we can see some strong displacements to the top side. Huh?
When you say displacement, what do you mean?
Like strong price action, strong runs to the upside. We don't want to see any slow movements. Like we don't want to see this midpoint of the imbalance being held. Otherwise, this part can act as a liquidity for price to displace to the downside. Do you get me?
Yeah. Okay.
Oh no.
What happened?
I think my I closed the chat. So let me share it again. 1 second. Um, yeah, this is the very thing we don't want to see. We don't want to see this. We don't want to see this at all. Uh, we want to see price breach and go higher. We don't want to see it stay within the same range. I don't want to see it go higher and higher and higher. And also leave this fair value gap possibly open as a breakaway gap. Okay, that's why I don't like recording while I'm chatting. It makes it really slow. I think I'm gonna have to use a different device for the recording. We don't want to see this. We want to see price rally up high, breaking and going higher.
maybe we can get 930 doing that.
Yes. The only hope is that it doesn't raid the sell side. You don't want to see a raid the sell side. Oh, no. About 17 minutes more into the volatility. 9:30 volatility. So let's see. Let's see what we get. Okay, this is good. Really want to see some displacement to the top there. We don't want to see price come down. Okay. So we're really good to see some strong bullish candle closes. Really strong ones. Taking all of this. Don't see any weak candle closes at all. Once we start going higher, all of these will be our targets. We want to see them swept. So now that we've closed above that imbalance, let's see if we can use it as an inversion fair value gap. What I mean by that is we want price to stay above that midpoint, like where it is now. We don't want to see it close below that level. I want to see price stay above it. I don't want to see it go below that level at all. The worst case, it should be dropping into this other block right here. Mm, Worst case dropping, but if we see a breaking below that, so okay, so that was good. I like that we stayed above the midpoint of the other block. If we can, that point can hold, then it might lead us to see higher prices. So let's see. If at 9:30 prices isn't able to bring us to this liquidity area, then that's a fine target. We are done for the day. That should be all. And if it decides to go higher, lead us to higher prices, that's cool. We really need the midpoint of the order block to hold. Nah, I really need it to hold to see higher prices. Kind of trader, you see price on these things around times when there's high volatility. You protect yourself, your stop loss, that break even, or at the point where you can take a loss because at 9:30 there'll be high volatility and the price action that we are seeing is not supporting bullish prices. So you want to protect yourself. It's good that we are not closing below it. Honestly, uh, no, it's not good. From this point, we have very few line of defense. It's still this liquidity void and then main balance. If they don't hold, you're probably going to see lower prices. And then you look over the 930 volatility. That's the thing. When you're in a trade and you're expecting strong bullish prices and do something at this point like this, you're not getting that impulse to break in significant high. And you just need to be careful, manage your trade well. It will be good if price doesn't go into the imbalance at all. Just buys from there. That's what we want to see. We don't want to see price go into it. Or even if it goes into it, we don't want to see it breach below the mid level. Really want to see price displays to the upside from this point. Otherwise, we are not going to see any bullish price movements. We want to see really fast displacements, quick price action to the top side. You don't want to see price go down. You want to see higher prices. The worst thing we want to see is an immediate rebalance and hits the top of this week and from there go high. But if it keeps pushing down, then probably not going to see high prices. clean up the charts and the leaders. So it'll be good to see price breach above this imbalance. We use it as a support and then push higher. We want to see price go above it. We don't want to see price stay below it. We have 1 more minute to the 9:30 volatility. Let's see what it does. In just a few more seconds. It'll be really nice to see higher prices. Higher, higher, higher prices. So that's it. You should be taking profits at that high. Right there, we hit it. The line I marked for you. So yeah. Then again, day two, reading us. If you took profits at that high, over 60 points already, or if you're holding the trade and you're breaking even to ride it to the upside. High, let me show you where I go into the long. Mm, just want to show you where I got into the long. So I go into the long as I was hitting right at this point. As I was hitting this imbalance, I go into the long, not expecting it to breach it, and then kept my stop loss right below it here. And we keep flying. We are already seeing over $1,000 in profits. And I'm expecting higher prices overall. So yeah.
Yes, we are. We are.
So yeah.
Thousand, thousands, thousand billions.